Good morning, everybody. Happy Tuesday. Hope you guys are well. Got a new month, a new quarter, and the second half of the year. So let's get to it. Just got back from a private banking meeting, and I can tell you, the positioning is very different than what these guys are doing than what the YOLO traders on Twitter are doing right now. So I'll give you guys some insight there if you guys would like. Let's get started. I want to make sure we get right to it. So if you're here for the first time, good morning, everybody. Serge Berger here from thestudytrader.com. This is our morning call. What we're going to do, we're going to spend the next 15 minutes or so going through the top things on my notepad. If you have never been here before, please make sure you subscribe to the channel. Very important. Allows you to be updated in real time when we go live with analysis and videos like these. Also, please give us a thumbs up, like on the video. As always, every day, that really helps the algorithm being able to give us credit for doing the show and so that we can continue doing it. So, all right, top few things on my radar. Let's see here. Let's kind of go through a couple of things that are very bullish and a couple of things that are very concerning. Let's start off with just the performance chart, just to kind of remind everybody where we're at. This is the year-to-date chart of assets, cross-asset classes, anything from, actually I should add a couple things here that fell off. Anything from European equities up 35%, uranium up 45%, gold has another nice day today so far. Gold is up today about 1.7%. Silver's doing well. Emerging markets, EMQQ, we talked about that one now for some time. And then, of course, you have the NASDAQ 100 up about 8, the S&P up about 5. And, of course, the question is that going to get better in the second half of the year, or is it going to stagnate and maybe get worse again? I don't have the answer to that. I'm sure someone does. What I can tell you is that we remain in a trading year, and I think we have to really recalibrate our expectations for what the S&P 500 can do here because of the single stock risk that we think is out there. So let's quickly go through a couple of things. I want to start off this way. We're going to get to the dollar. I actually this morning added a long position in the dollar for the first time in, I don't know how long, it's probably been quarters since I've done that. We'll get to that, and I think that might be the thing that I want to get to in a minute. But let's quickly talk a little bit about equities just first. The S&P, where are we at? So what we had is we had an end of quarter, end of first half run in NVIDIA, in Microsoft, and that now leaves us with extremely vertical charts, particularly on a single stock basis. So what tends to happen is that you have to think about, as we go into the second half of the year now, if you are a professional portfolio manager, you are going to start to feel the pinch because the S&P is up 5, again, the NASDAQ's up 8, and you have this chart chasing that begins to happen. Now, one of two things can happen here. It either stops and then reverses, or it just continues slowly grinding higher until we get to the point where it then just has to take some sort of a breather, maybe in August, September, October. I don't have the answer to it. I really don't. But I can tell you that we're going to be using our trend or momentum indicator because that's going to tell us when momentum is changing. So far, we have just very, very steep charts. I've been talking about this Microsoft chart. This is the daily chart of Microsoft. Microsoft, since, let's say, March, I'm not even going to go to the lows of April, but let's say since March, is now up 30%, and obviously way more since the April bottom. I think these are stocks that are at risk of mean reversion. Not that they have to fall apart, but these are not natural moves. And you can look at in past when we have these kind of moves, these stocks tend to mean revert or at least pause, right? So even if you go to the more conservative type of ones like here, where the stock didn't actually mean revert 30%, it still basically did nothing for, let's say a month. And I think that's kind of where we're at right now. Probably the poster child of all this is Roblox. And if any of you guys were around during COVID, I mentioned many times what I think my bull case is on Roblox. The problem is here that this move has nothing to do with fundamentals right now. This is purely algorithm chasing and a good friend of mine runs a big algo shop, and he verifies this very clearly. If you're wondering what the algos are following, I'm going to give you a little bit of behind the scenes look, and tell me, if this is helpful or if you'd rather not join us here anymore. But what you're looking at here as the blue line is the 8-period moving average. Okay, so this is the 8-period moving average on Roblox, and you tell me right now if you think the algorithms might have something to do with using the 8-period moving average in their calculations, right? I'm not making this up. This is typically when the algos are in charge. This one and another moving average tend to be the ones that they chase. This is an extreme case. Typically, the 8-period moving average does not hold this long, which is also why I think Roblox, once it starts to mean revert, can absolutely and easily, and this is not something that the bulls like to hear. So by all means, please get your 10-page hate mail ready for me. You can shoot it over to support. But basically, this is easily a situation where a stock like this can start to mean revert 50%. So there's absolutely no reason why this stock can't go down to, say, 78 within a pretty short period of time. Because when the algos, at some point, they stop buying the stock, and it basically just air pockets. Again, it doesn't have to happen, but there's a pretty high likelihood that it will happen, right? So just it's not a guarantee, obviously. There's very few guarantees, but that's something you have to keep in mind. And it's all because we live in an algo-driven world. That's why I keep saying we live in an absolute peak gambling bubble. It's not going to end well, whether it stops working next year or later this year. I don't know, but this bubble will blow. There's no doubt about it. These are not healthy moves because what happens is they start getting people in that have no clue about markets and giving them false hope. And then they blow up their accounts. And with the advent of Robinhood and the hoodies and all that, funny business out there that make trading seem like a video game, literally, there's absolutely no reason to have any faith in this ending well. It's going to blow up, but it's not going to necessarily blow up because of valuations, but because at some point there will be a recession, and some point people will lose jobs, and then they stop trading, and they usually blow up first, and then they lose their job, and that's what I'm trying very hard for people not to do. Sadly, I know even probably in here, about 50% of you are probably going to fall to that prey because you're not willing to listen. I'm not trying to scold you here, so please apologize for sort of the tone, but I know it will happen. So I'm trying really hard for this not to happen to you because we see what's happening. So I'm trying my very best to kind of get people on the right train. So this is what's going on in these stocks. So I'm actually looking to put on bear call option spreads on Microsoft and maybe at some point in Roblox. Roblox is still in full chasing mode, but that's what we're going to try to do is put on some bear call spreads with options on Microsoft and Roblox at some point in the coming days, maybe today, maybe later this week or next week. I don't know yet. We'll have to see how much more this continues. However, what I really want to get to is I want to get to two particular things here that actually led me to close the short position in yields. So for those of you guys that were here over the past week or so, we've been basically talking about being long the two-year bonds through either futures or there's levered ways of doing that with ETFs as well. Like SHY and levered versions of that, or options on those ETFs, and we've been right? So yields have come down. Yields have come down from like almost 4% down to earlier today about 3.7. And I closed this trade this morning. If you're ever in trade ops, I talked about it in real time about 2 or 3 hours ago. I closed that trade. And the reason I did so is not because I don't think bond yields could go lower, but because the dollar is so extremely oversold here. So I actually think that the dollar here, and this is the dollar index, the DXY ETF, I think at some point here there's real risk of the dollar index having a meaningful, sharp reaction in the opposite direction. I think we're getting very close on that. It's basically the euro that's overbought in my view. So the dollar index is basically, tracking a bunch of currencies, one of them being the euro. So this move here to me just seems overdone. So I don't know what the trigger is, but I'm concerned that if this were to happen, that bond yields then might also actually go back up just because of the correlation metric that hedge funds have. So I'm no longer short bond yields, meaning long short end of the bond of bond price, at least not for now. But I am long the dollar for a trade. And what I did specifically, I bought basically. I shorted. Let me see what I'm doing. Yeah, I'm short basically euro versus dollar. Which is the inverse of basically saying, I'm long the dollar index because the euro is the major input versus that and the yen. So anyway, I'm concerned about it, and also we're turning out here into the second half of the year again, new month, new quarter, new half of the year, where a lot of times you could start to see some of these positions get unwound, at least for a bit. Doesn't have to happen today. We have a bit of a weird week. Today is a national holiday in Canada. And of course, on Friday, we have 4th of July, so U.S. markets are closed. And it's hot as balls here in Europe, I can tell you. So a lot of people aren't even going to try to work. It's ridiculous. So anyway, so just kind of keep that in mind that we are at a pretty critical point here where we might see a reverse in the trade here, at least for a while, right? This doesn't have to be all of a sudden a new bull market in the dollar. I just think it could get squeezed. So that's kind of, and to me, the question of course is, does that fold on over into equities? I don't know, quite frankly, but I do think that stocks like Microsoft, and there's a whole bunch of others, by the way, as well, and Roblox can easily mean revert here because they're just very, very dramatically overbought. So that's really all I want to go through. We have a couple of trades that we do still like on the long side, particularly the energy parts of the market are very interesting. So we're going to talk about those over in our Inner Circle Market Rover member session, which starts in about 5 minutes. I also would mention that because it is the start of a new month, of a new quarter of the second half of the year, just like yesterday was the last day of the prior month, quarter, and first half of the year. Just keep in mind that we might have some funky price action because this is the time here right in the middle as we move into the second half of the year today, where a lot of funds are going to start making changes. For example, I'll give you an idea. We saw, for example, on Friday, Palantir was quietly down 9%. No one cared. Well, I'm sure some people blew up. Plenty of people probably blew up because they were long, weekly call options or something ridiculous. So they probably all blew up on a summer Friday, which is the last thing you want to do. But that's what people do. And so that's the kind of thing that happens at the turn of the calendar, whether into a new month, into a new quarter, or in this case, literally also in the second half of the year. There are rebalances being made. To me, it sounds like that was like an index rebalance, but it could also be a bunch of ETFs or funds rebalancing things. So, there might be some funds. I mean, and this is, that's just how funds work. I wouldn't be surprised if some funds will say, okay, well, Microsoft's had one hell of a move, right? Maybe it's time to clip some of it. That's the kind of stuff that you have to think about this time of year, and tune out the 25-year-old clowns on YouTube. They know nothing. They're mostly just selling clickbait and fantasy. So that's my Tuesday rant. Happy July. See you guys over in the Inner Circle Market Rover member session in a couple of minutes. And if you are a Trade Ops member, we'll see you over there shortly as well. Happy July and have a good start to the second half of the year.